Guys, I know we're a bit behind on our Q2 earnings, but only so much can be tackled in a single day. Now I'd like to take a breather from our coverage on producers to tackle a harder segment of the industry, the royalty names. And given this may be our last time covering Sandstorm Gold royalties as a result of a pending merger with Royal Gold, I figured there was no better place to start this round of earnings coverage. All right, guys, let's dive in. Sandstorm Gold royalties in the second quarter of 2025 hit a new record with top-line revenues, which came in at $51 million versus $41 million in the year-ago period, an increase of 24% on a year-over-year basis, and was also up from $50 million in Q1. The figure follows $21 million in royalty revenue versus $16 million last year, alongside the sale of 15,000 gold equivalent ounces within the quarter, as compared to 17,000 ounces in the year-ago period. 82% of revenue came from precious metals, while 11% was attributed to copper and 7% from other commodities. Of course, the massive increase in the price of gold masked the weaker sales figures in terms of equivalent ounces, with the average realized price rising from $2,300 to $3,300 an ounce on a year-over-year basis, a rise of over $1,000 an ounce. But we should also note here that despite record revenues, this was the worst quarter for Sandstorm in terms of per ounce sales in at least 2 years, which is not a good position to be in while in the middle of a strong gold bull market. Average cash cost per attributable ounce, meanwhile, is on the rise, jumping from $270 an ounce to $350 an ounce on a year-over-year basis, an increase of just under 30%. However, the rise in gold prices more than offset this, with Sandstorm posting record cash operating margins of just under $3,000 an ounce, which was more than the average realized price of gold in the comparable period. Cash operating margins in Q2 2024 comparatively were $2,000 an ounce. Overall, net income totaled $16.9 million or 5 cents per share, as compared to $10.5 million or 3 cents per share in the year-ago period. Cash flows from operating activities, meanwhile, amounted to $38.5 million, down from $40.7 million in Q1, while being up from $34.4 million in the year-ago period. Despite these cash flows, Sandstorm ended the quarter with cash and cash equivalents of just $6.6 million versus $4.4 million at the start of the year, while working capital stood at $23 million. However, $26 million in net debt repayments were made over the course of the second quarter, with $315 million in debt remaining outstanding as of early August. Sandstorm also declared a dividend of 2 cents per share for the second quarter. Sandstorm in this last quarter left their outlook unchanged from Q1. Current guidance calls for between 65,000 and 80,000 ounces of production in 2024, which is said to consider a range of commodity price scenarios. Year-to-date, production sits at 33,590 ounces, which implies that Sandstorm is well on track to hit that target. But production also dropped by over 3,000 ounces of gold equivalent from Q1 to Q2, which doesn't set the company on the best path. Of course, they blame the rise in the price of gold for this drop, but precious metals make up the vast majority of their current production profile. Looking deeper, production at Chapada cratered on a quarter-over-quarter basis, falling from 2.9 thousand gold equivalent ounces in Q1 to 644 gold equivalent ounces in Q2, which wasn't just a function of gold prices going higher, because sales and royalty revenues crashed from $8.3 million to $2.1 million, while revenue also crashed at the Antamina copper stream. Overall, revenue improved at 11 different high-profile streams and royalties in Q2 versus Q1, while declining at 5, meaning the declines were just that much more dramatic than the improvements on a broad basis. Revenue improved by less than $1.4 million quarter over quarter. And despite per-ounce metrics crashing in recent quarters, Sandstorm still maintains that they will produce roughly 150,000 ounces of gold equivalent annually by 2030. But of course, that long-term production outlook doesn't matter much anymore, following the announcement on July 6th that Royal Gold will be acquiring Sandstorm for roughly $3.5 billion. Well, we did a full video on it that you can find here. Sandstorm shareholders are to receive 0.0625 shares of Royal Gold for each share of Sandstorm currently held, while simultaneously Royal is also acquiring Horizon Copper Corp. Post-transaction, shareholders of Sandstorm will hold 23% of the resulting company. Upon closing, Royal Gold will have a portfolio consisting of 393 streams and royalties, of which 80 are currently cash flowing. No single asset will account for more than 12% of the net asset value, while the estimated revenue mix sits at 87% precious metals, of which 75% is gold, while also boasting streams and royalties on some of the largest and up-and-coming development projects globally, including Mar, Hod Maden, Great Bear, Warintza, and Platreef. The draw for Sandstorm shareholders in terms of the transaction is largely related to being a part of a much more diversified portfolio in terms of cash flowing assets, while having exposure to some major oncoming development projects. As we said, you can get the deeper details in our video on the transaction. That deal is currently expected to close in Q4. All right, so let's wrap it up. Sandstorm had arguably a mixed bag of results. Revenues were up marginally, while gold equivalent production took a nosedive. Sure, some of it was attributed to the increase in the price of gold, but digging deeper, the numbers tell a bit of a different story. But the truth is that it doesn't really matter anymore, so long as the results weren't a complete bomb. With Royal Gold coming in for the buyout, Sandstorm just had to maintain the status quo for this quarter, and potentially next quarter, just enough to keep Royal happy. With that $3.5 billion price tag on the table, it's not like the valuation of this name was going to go up or down either way based on the performance here. Nolan and his team already did the legwork to get here, and now it's just a matter of enjoying the fruit of that labor. All right, everybody, thanks for watching. If there's stories you want us to cover, as always, let us know in the comment section. We're always looking for ideas. Also, we got lots of earnings coverage on our channel, so if you're into mining earnings, check out our channel. And lastly, if you enjoyed this video, do me a favor, smash that like button, subscribe, and ring that notification bell. All right, everybody, thanks for watching.